If you're watching this, then you're someone who has been funded before or even reached the payout stage. But the main problem that you're facing is that you cannot scale your trading income simply because you are relying on one funded account, maybe two. And that is the exact same problem that I was running into whenever I was trying to scale my prop firm income to 5 figures a month. This might sound familiar. You have a great week and you get funded, but on the second week, you end up having a really bad week. And what ends up happening is you blow your funding and now you're back to square one, building again from the start. And that is the same thing that I did not want to face and keep running into every single time I was trying to scale my prop firm income. And so instead of relying on just one account to produce all the payouts for me so I can have an income with trading, I shifted to a mindset of building 7 figures in prop firm funding for me to generate consistent income in trading every single month, regardless of what happens to one single account. Even if I have one bad week, it doesn't mean anything because the other accounts are still there, still funding, still producing payouts. And that is the one shift that allowed me to go from always being worried about blowing an account in one bad week to being okay with having bad streaks, because I know that I have many accounts that I can rely on for me to generate payouts and I'm not solely dependent on one prop firm. And so in this video, I want to show you exactly how you can do this as well, step by step, breaking down the whole process that I've done to take me from basically 100K in funding whenever I started my prop firm journey to now having a 7-figure prop firm portfolio, which pays me every single month. If you stick around to the end, I will give you the exact strategy that I use every single day in the markets for me to be able to consistently manage a 70% win rate with at least a 1-to-2 risk to reward ratio. And with that being said, let's dive right in. So to start, how many prop firm accounts should you purchase if you want to scale to $1 million in funding? I will show you the math and I will explain exactly how much you need. Let's start with the first thing, which is our goal. Let's identify the goal. It is $1 million in prop firm funding. So how are we going to achieve that? What do we need? What are the metrics that we have to follow? So for us to hit that, we need 20 accounts of 50K. So usually when I do a challenge, I go for 50K account sizes rather than bigger account sizes, just simply because it's easier on your mindset and psychology, right? So I would go for 20 50K accounts. Those 50K accounts come out to about $100 on average on those prop firms. So with Tradeify, you have Lucid, and you have Alpha. Those are the prop firms that I've seen work best. And on average, you will get $100, maybe sometimes even less per account, per 50K account, which means for the 20 accounts, you're going to end up spending $2,000. So $2,000 to get 20 50K prop firm accounts. Now, here's the thing. You're never going to have 100% success rate on passing all the accounts. Let's be conservative here. And let's say we have a 70% success rate on passing those accounts. Put here 70% success rate, right? So success rate on passing the account, which means we are going to pass 14 accounts out of the 20. So that means we have 14 passed accounts that are funded now, which leads us to getting 700K in funding. So now we're funded 700K in prop firm capital. But the goal is to obviously scale to $1 million. Now, how are we going to scale to $1 million? We need to purchase more prop firm accounts. So then we have 300K left. So for us to get 300K in prop firm funding, we have to spend another $900. So that way we can purchase 450K in prop firm challenges, right? So 50K accounts, we need to purchase 9 of them. So 9 times 50K, which is 450K in prop firm challenges. With a 70% success rate, like we had earlier, you're going to achieve 300K in funding. Now you have $1 million in prop firm capital, funded capital. Now, here's the question. It's like, okay, well, I've spent 20 so far. I've spent 2,900 and you haven't made any money back yet. You've only got the funding. So now let's calculate what would the return on investment be on that 2,900. So let's do the math together. Let's round it up to 3K. Let's say we spent 3K and in turn, we got $1 million in funding. Now on the $1 million, you have to reach a profit target of 6% on the prop firm account for you to actually get paid. So we need 6% profit target, which means that is $60,000, $60K, for you to then request a payout. Now, when you request a payout, they don't actually give you the full amount. They give you 50% of that. So out of this, you're going to get 50%, which is 30K. So you're going to get paid 30K out of that 60K on your $1 million of funded capital. So to put that into perspective, you've spent, let me put that in a different color. You've spent $2,900 and you made an ROI of $30,000. So times 10 ROI. So pretty much times 10, 2,900 to 30,000. And you can do that again next month, right? You don't necessarily have to start from zero and reset the whole time. You actually continue, and the next month you ask for another payout once you reach that profit target. So I don't really know anywhere else where you can get a 10x return on investment that quick, but this is really the math behind it. And you need to understand which prop firms also to work with and your success rate on those challenges. Some people might have a lower success rate. Some people might have a 40%, 30%, right? Some people might have a higher success rate, 80%, 90%. I can't really be the judge of that. Only you can, depending on the way you trade. But again, if you keep watching more, I'm going to dive deeper into it in this video to actually show you how you can increase your chances at succeeding with those prop firms and make sure you maintain at least a 70% success rate. You always have to ask yourself, how long does it take to pass a prop firm challenge? This totally depends on you, right? From trader to trader, it's different. So you need to understand that you have to set a time frame, right? So set a time frame that you are comfortable with. Not that I'm comfortable with, but the one that you are most comfortable with in terms of when you want to pass the accounts. Whether you want to take 30 days or you want to take 5 days to pass the account, that is up to you, but it's going to change the parameters. Now, once you understand whether you want to take 30 days to pass or you want to take 5 days, you have to, once you've made your decision on which one to go for, you then engineer a plan to go backwards. So we engineer a plan backwards to work towards that. Because many of you guys want to pass it in 30 days, but you act like you're trading a 5-day panic. You act like you have the next 5 days to pass it or else it won't work out. So stop pushing yourself to those limits and understand that, okay, if I pick 30 days, that means I have to risk less because you have more chances. If you have a 5-day window to pass it, now you have to increase your risk. You have to risk more and you have less chances. So again, if you want to pass it in 5 days, that's totally fine. Just make sure you understand and engineer backwards what you need for you to pass it in 5 days. If you want to pass it in 30 days, that is probably better that you give yourself a little bit more time, because then you're not panicking and you're risking less with more chances. But do not make the mistake where you want to pass in 30 days, but you're working like you're in a 5-day panic. That's the problem that I see with a lot of people, is they give themselves the time, but once they actually jump on the charts, they act like they have to pass it today, tomorrow, or in the next 5 days. So make sure you understand that point by setting a time frame. The next thing you need to ask yourself is, how much should you risk per trade? That's number one. Number two is, what should your risk to reward ratio be on those trades? And number three is the win rate that you need to aim for you to actually get the best results on your prop firm accounts when you're trying to pass a challenge. Now, this is all data from when you want to pass a challenge, not on your funded account. Keep that in mind, is you want to trade funded accounts differently from how you actually trade challenge accounts. So let's dive right into it and break down the math behind it. So first thing is, how much should you risk per trade? Personally, by the way, everything is from my personal experience. Like, I don't know what you've been doing, what someone else does, or what anyone else says. This is simply what I've been doing to scale to 7 figures and prop firm capital. So this would be, for me, I risk 1%, right? I simply risk 1% per trade. On every trade that I take, it is a 1% risk. So on the 50K account size, I am risking $500. That way I'm not emotional. If I lose, I lose. If I win, cool. There's no emotions behind it. If I'm only risking $500, really it's not a big deal. Especially that it only costs $100 to get a 50K account size. And now you have to go on to the next question is like, what should your risk to reward ratio be? For me, I have my take profit. By the way, I don't set a hard take profit. I never set a hard take profit, but I usually put it take profit at 1.5 RR. Right, risk to reward ratio is sitting at 1.5. That's what I found works best for me personally. Everything is from my personal experience. You don't have to follow it. If you want to follow it, cool. And then the next thing is that what should my win rate be? My win percentage personally usually is around 70%. So I have a 70% win rate. Now let's engineer backwards. How much do we need for us to pass a prop firm account? We need 6% profit target. 6% profit target, which comes out to $3,000 on a 50K account size. Okay, so now let's do some math. Right, let's say we take 8 trades. Usually that's how long it takes me for me to fully pass a challenge, sometimes less, sometimes a bit more. So on average, let's say 8 trades and we're risking 1% per trade. So let's do the math. We are risking 1%, that is 500, and we have a 1.5 risk to reward ratio. So then every time we win, we are making $750. And we have a 70% win rate, which means out of 8 trades, we are going to win 6 trades and we are going to lose 2 trades. So when we win 6, we make $750 on each one, which comes out to $4,500. Now, of course, you need 3K only to pass, but we have to account for the 2 losses that we're going to experience as well, right? You can't skip the losses, which is $500 per loss. So every loss is $500. And if we have 2, that is $1,000, which then if you put the 2 together, do the math, that is $3,500, which would give you the 6% profit target. So then you would be able to pass the account comfortably. So this is the math that of how much you should risk per trade, the risk to reward ratio, and the win percentage. This is how I work backwards for me to achieve those metrics, for me to be able to have the highest chance at passing prop firm challenges. Now, one of the trickiest thing that you will run into is if you lose a trade. Believe me, I see that because I've been there, I've done that, and I know what emotions you're going to experience. It's going to start with, first of all, frustration. This is going to lead you to a downhill spiral of things unfolding against you. Like the earlier that you can catch that, the better it becomes, and then you won't keep falling into that trap, and you're going to be able to overcome it pretty quickly. Now, what I recommend is just take 1 trade per day. If it wins, cool, you're done. If it loses, take another one. That's fine. You're only allowed 2 trades per day at 1%. Do not over risk. Do not over leverage. But the thing is that I see most is as soon as you lose, you have a lot of emotions, which then those emotions lead you to oversizing to make back what you lost. But that is never a good idea because the market is simply not in your favor that day. You need to understand that not every day is going to be a good trading day. It's simply not going to work out. Not every day is going to go in your favor. Even me, I experience that all the time. But you have to be able to build that habit where if you lose, accept it. You have to accept losses because they're part of the game, and you're never going to learn if you don't actually accept a loss and move on. If you keep trying to chase, you know what's going to happen. You're probably already experiencing it. It's simply not going to lead to anything good. So take 2 trades max per day. If you win, you're done. Cool. You've made 1.5% risk to reward ratio. If you lose, you can risk another 1%, but you cannot go over that or else you're going to blow your account. Again, this is the difficult side of trading, which is losing. No one likes to lose. I'm naturally a winner in everything I do, and I'm sure you are as well. So when you lose, you're going to experience emotions of frustration, of feeling like things are just impossible, feeling like you're not meant for trading. Because sometimes I used to feel this exact same way. I used to think, okay, like this is impossible. Like trading is just not going to work out for me. But then I come back the next day and I end up winning, right? And then I'm like, you know what? If I had just stopped trading for the day yesterday when I lost and came back today, then I wouldn't have blown that account. What I used to do is I would lose on an account. I would over risk to make back what I lost plus more, and then blow that account. And then I wouldn't even stop there. I would go out of my way to purchase another account for me to try to pass it so I can make up for what I just lost. But again, that's what leads me into this downhill spiral of me trying to chase. And the more you chase, the more the market is going to move away from you. Because that is how things are in real life even. Not just in the markets, but in real life. If you keep chasing something, it's going to go away from you. The harder you chase, the more it's going to go away from you. So learn to just attract. Learn to just sit on your hands, wait for a setup, and then take it. If your setup is there, cool, take it. If it's not there, do not take it. Do not force things. Because what ends up happening is after you lose that first trade, that second trade, you're not following your plan. You're going to justify to your brain any setup that is not there for you to take. So be patient, wait for your setup to show up again, and then you can take it, no problem. But do not force it if it is not there. You have a second trade, which is a second chance. Use it properly. If it's not there, then you wait for tomorrow. If it's there, you take it. So that is what you need to do when you lose a trade, because there's going to be a lot of feelings, a lot of emotions that are going to come out of you. But just remember this video. Remember what I'm saying right now and make sure you follow it, because it's going to save you a lot of, 1, failed challenge fees, and 2, the confidence that you have in yourself. Now I want to show you a trick that not a lot of people talk about, which I found helped me so much in my trading. And it is how to actually maximize your profits. Here's what I mean by that. Most people set a hard take profit. And a lot of the times, what will end up happening is if the trade is going in your direction, it will hit your take profit and it will keep actually going in your direction. It won't actually reverse on you. So this is a problem that you're going to be facing, is that once it hits your take profit, you're simply going to exit that trade fully, and then it's going to continue in your direction. So why are you missing out on your profits? Everyone wants more profits, but whenever you're in a drawdown, you tend to increase your stop loss because you're the most hopeful person and you feel like it's going to reverse and go back into profit. Well, why don't you have that same mindset whenever you're in a win? Whenever price is close to your take profit, make sure you don't have a hard take profit. And what I recommend to do is this. So every time you have another candle, every candle that is printing, let's say your take profit is down here. What I would do is I would take my stop loss and I would bring it down to follow. So if, let's say, price continues down, I would put my take profit behind, or my stop loss behind the last candle. If another candle prints and it goes down, then I would move my stop loss right here. If another candle prints, I would move my stop loss right here. Worst case scenario is if it reverses and it goes into your stop loss, you still made the same amount of money or even more. But if it continues down and you have one of those big moves, then you've capitalized on it and you took that to your advantage. So always remember that. You're always winning if you keep holding your winners. Do not cut them short. There's no reason for you to cut them short. Be a bit more patient. Don't be scared that what you just worked so hard for is going to go away. Because that's the mindset of a lot of people, is like, okay, I've just worked so hard to win this trade. I don't want to give away those profits. So always think in the mindset of abundance. There's always more profits for you to achieve. So don't cut your profits short and keep holding your winners. Simply all you do is you trail your stop loss underneath the last candle, where if it's bearish or if it's bullish, doesn't matter. Put your stop loss below the last candle. So if it reverses, you lose nothing and you've made more money. If it continues in your direction, you keep trailing your stop loss, which gives you more profits. It's such a simple trick, but it is so effective with prop firm accounts. Now, to take me to my next point. Here's another thing that you can utilize on, and it is copy trading. Now, copy trading can be extremely dangerous if you don't use it correctly, because you can more often than not reset back to zero because you're trading all the accounts at once. But if you use it correctly, it can save you so much time on your challenges and so much time for you to hit that profit goal of $1 million in prop firm capital. Now let's take a look at here. We need $1 million in prop firm capital, which means we're going to be trading 20 prop firm accounts. Now, if you do the math and you take 20 accounts and you trade them individually, each account is going to take you 8 trading days based on the math that we went over earlier. So 8 trading days times by 20 accounts, which would come out to 160 trading days. So this means for you to be funded, $1 million is going to take you 160 days without using a copy trader, which is simply way too long. I don't want to be waiting 160 days for me to get fully funded $1 million. So then what we can do is we can use trade copiers. Now what we will do is we will take those 20 accounts and we will break them into 4 groups of 5 accounts each. It would look something like this. Now for each group, it's going to now take you 8 trading days. Right, because you've put them all together. There's 5 accounts in that group, so which then would be 8 trading days for every group. Once you're done with this group, you move on to the next group, then you move on to the next group, then you move on to the next group. Now if you do the math, that would be 8 times by 4, which is equal to 32 trading days. So you've just saved yourself 130 days almost by simply using a copy trader. So again, when you want to scale to $1 million, make sure you're using a copy trader because it will make your life a lot easier and it will save you so much time. But again, use it wisely, or else if you put everything together and you put all your eggs in one basket, you're simply going to blow everything either really quick or you're going to achieve your target very quick, but it's going to be risky, right? So group them into 5 accounts in every group, and it will take you 32 days based on the math that we've done. Trading is a lot easier than what you guys make it to seem, and a lot of people are just complicating it for absolutely no reason. So I'm going to show you exactly my thought process every time I hop on the charts and what I look for me to be able to catch A+ setups and win almost every single day. Well, not every single day, because some days I just have to walk away from the markets because there either just is no setups, or if there's a setup but it doesn't work out, that's simply the market telling me it's not a good day to trade. So with that being said, let me show you exactly how I go on about my analysis and then also my lower time frame entry. So I always have to think about it from a bird's eye point of view. So to start, you have the higher time frame analysis. So on the higher time frame analysis, I always start on the 4 hour. I don't go anything higher than the 4 hour just because I am pretty much just trading during that session from 9 a.m. until 11 a.m. Eastern time. And so I don't need to look at the hourly or the weekly chart because it doesn't concern me. I'm looking for smaller moves. And so I start on the 4 hour chart and I'm looking for any areas of interest. Areas of interest can be, I'll just put them down here so you understand what I'm talking about with areas of interest. They can be either liquidity, sweep, it can be fair value gap, or it can be an inverse fair value gap. If I see one of those 3 happen, then I know we have an area of interest or we're in an area of interest. Now, the best thing that you can find is a sweep off liquidity plus a fair value gap. That would be the highest setup, something like this. So I'll type it out. So let's say I want to sell it and price comes up, sweeps this liquidity. This is the best types of setup. So let's say we have a fair value gap in this area and we've just swept this liquidity, then this is exactly what I'm looking for. That is my A+ setup. That's what I'm looking for on the higher time frame. Okay, so now we move on to the 1 hour chart. It's the exact same thing. I'm also looking for those confluences, right? Any areas of interest. If I see this again on the 1 hour chart, then I know I'm exactly where I want to be. So again, I start on the 4 hour, try to look for anything. If there's nothing, I drop down to the 1 hour. If there's nothing on the 1 hour, by the way, I'm done for the day. I'm not going to force anything. I'm not going to drop down to the 15-minute and try to force anything. I'm simply going to walk away. If you don't see any sweep of liquidity, or you don't see we are in an area of interest, fair value gap, or we've just inversed the fair value gap, then walk away. And then from there, if you see something like this on the 1 hour or 4 hour, any areas of interest, you then want to drop to a lower time frame for an entry model. Now, the entry model that I personally use is inverse fair value gaps. Inverse fair value gaps, I'm sure you guys know what it looks like, but I'll show you here. Let's say we're trending up. I'm looking for a gap to be inversed for me to then take it lower. So let's say we have an inverse fair value gap in this area. Price comes and inverses it fully. So we turn this from a fair value gap into an inverse fair value gap. Then simply my entry is right there. My stop loss above the fair value gap. And then sometimes it depends. Sometimes I will put my stop loss above the last high. It just depends on my profit target. What am I targeting? Am I targeting a 1-to-1, 1-to-1.5, or 1-to-2 risk to reward ratio? Depending on that, I will set my stop loss. You can see here, you then set your take profit, set your stop loss, and then you want price to tag you and do something like this. Now again, you want it to move with more momentum down in your favor. But that is the entry model, is inverse fair value gaps. So on the 5-minute chart, again, I'm looking for a inverse fair value gap to happen. If we get an inverse fair value gap on the 5-minute chart off the open, which is 9:30 a.m. Eastern time, then cool, I will take it. So if I get an inverse fair value gap on the 5-minute that I'm not so sure about, what I will do is I will then drop to the 1-minute chart. But I will not drop to the 1-minute chart directly off the 1 hour. I'll drop the 1 minute after a 5-minute inverse. So let's say we got a 5-minute inverse. Let's say this is a 5-minute inverse and we've just inversed it. Now what I can do to get a double confirmation is wait on the 1 minute for a retracement back into here, because sometimes the 1 minute will do something like this. And then from here, wait for an inverse on the 1 minute again. So we'll wait for price to inverse on the 1 minute right here, and then I will actually take my position right there. I'll take my position here, and then my take profit would be there. So this is what I would do sometimes on the 5-minute if we get an inverse, but I'm not so sure about it. I will wait for a 1 minute retracement, or if my stop loss, let's say, is just too big, I will wait for a 1 minute retracement and then enter. Now, here is an important thing, is you also want to get a liquidity sweep on the lower time frame. That just increases your chances. Think of it this way, like everything starts with liquidity. If you can spot liquidity and you can take trades off of liquidity sweep, like after we sweep liquidity, let's say for here for example, on this, if you have a sweep of liquidity right there, then that gives you way more confidence in your trade. It gives me more confidence that, okay, we swept liquidity, we have an inverse fair value gap, cool, everything checks my boxes, this is an A+ setup, I will take it. Right now, sometimes it might not work out. That's the reality of trading. Not every single trade is going to work out, but most of the time from the back testing that I've done, almost I would say 8 out of 10 times, if you get this exact setup, it will play out. And that's what led me to actually passing so many prop firm challenges comfortably, because I'm able to spot that. And the days that it's not there, I don't trade, or I might go lower risk. But when I see this setup, I risk what I'm supposed to, and I trade on my prop firm accounts because I'm so confident in this setup, because I've seen it play out so many times and I've back tested it so many times. So if you go on your charts and you back test this, you will see this work out so many times. So now let me show you a little bit of context on the NASDAQ on what I'm talking about, right? On the 4-hour chart, for example, you have here area of liquidity that's sitting right there. You can see here you have liquidity and you have a fair value gap that's sitting in this area right here. If we get a sweep here, so if we take out this liquidity, I'm confident that price is most likely going to react and go lower, right? So in this case, let's see what happens. And by the way, I can show you even more of that, right? Like you can see here, we end up sweeping liquidity, literally just sweeping liquidity right there with a fair value gap, and it leads to price dropping. All right, so either way, let's go back to our example that I have set out here. And you can see all you want now is price to come up, tag us here, not tag us, we're not entering until we confirm on the lower time frame, but let's see what ends up happening. If we play it, there you go. So we just swept liquidity and price ends up dumping. All right, so this is exactly what I'm looking for. Let's see if we can find another example. Okay, let's see. Okay, you have here, same exact thing. You can see here, we ended up sweeping this liquidity. We have a fair value gap here. What ends up happening is it touches it and literally drops. Let's see if we can find another one. Okay, you have this here, which is literally a fair value gap here. You have this new liquidity right in this area, this high. Price enters, tags us in, drops again. Right, so you can see the pattern. You can literally see the pattern. Now what we do, it doesn't make sense now for me to just be like, okay, well, I'm just going to enter off of this right here. It doesn't make sense because I just simply do not trade. I'm not a swing trader. I'm a day trader. And so what I'm going to do is I'm going to try to capitalize on the move in here. So after this has happened, I will drop down to lower time frame and capitalize on this move, like smaller moves within this whole range. That way, I don't hold trades for too long, because the longer you are in a trade, the more emotional you become. And for me, I would rather be in trades short term. That way I can control my emotions better, and that's just my style of trading. So now let me show you some examples on the lower time frame of what I would actually enter, the entry model that I'm using. Now you can see here we are in the 4-hour fair value gap. We took out the liquidity. Now you can see here as well, on the 5-minute, we just got a sweep of liquidity on here, right? Like you can see, literally swept it by like 1 or 2 pips. And here you have a fair value gap that was created right in this area. So that is great for me. And look at the timing. The timing is 10 a.m. Eastern time, which means if we end up inversing this candle, inversing this area, so I want price to inverse right here. And if it does, I'm simply going to take my entry from here all the way down. So let's see what ends up happening. If we play it, we have not inversed it yet, so you have to be careful. You can see we have not inversed it, and we just inversed it on that candle. So let me just take us back here. So as soon as we've inversed it on this candle, I would simply take my entry, I'd put my stop loss above here, and then my take profit is probably going to be those lows. Now what I would do is, as soon as price comes into this area, so as soon as we take out this low, I would move my stop loss to break even, for the simple fact that we have a fair value gap here, which means price can easily come down to here, take out this liquidity, react off of this fair value gap, and continue higher. So again, I want to make sure that all the odds are stacked in my favor, which means once price reaches this area, I will go break even. And you can see here, price ends up going here, it's break even, and then continues all the way to take profit. You can see how simple, how easy this model is, but all it takes is just controlling your emotions and waiting for that setup to happen. That is literally what you need. Okay, here's another example that we can see of an entry model. Now this is on a buy position, right? So I showed you a sell position. Now I'm going to show you a buy position, what that looks like. So you can see here, we have a bunch of liquidity sitting right here. You can see on the 5-minute chart. All right, let me just mark it out. You have liquidity, and you also have liquidity here as well. All right, so you have 2 areas of liquidity. Now, depending on price, I will wait for either one of them to get swept and then give me a confirmation, or both of them to get swept and then give me a confirmation. In this case, let's see what happens. We have price come down, right? We are 10:05 a.m. Eastern time, and there you go. Now you just have price swept this liquidity, and what ended up happening is we left a bullish fair value gap that's sitting right here. Right, so we have a bullish fair value gap, and we swept another liquidity. So now all I'm looking for is price to simply reverse, fill this fair value gap, turn it into an inverse fair value gap for me, so to then take it to the upside. So something like this, and then just simply take it all the way to the upside. Let's see what happens. You can see price starting to react right after we took this liquidity, and now we're rejecting this fair value gap, which is normal. And there you go. We just got an inverse, which then would lead me to take an entry here. My stop loss, depending on it, I might sometimes even wait for a 1-minute retracement, or I might just take it here. Either way, just depends on your take profit, right? So for me, for example, if I'm targeting a 1-to-1, this is cool. I'm okay with this. 1 to 1.5, I'm cool with me taking my position here, or sometimes even putting my stop loss down here. For the most part, it should be good if you put it just under the fair value gap or this last candle. You can see here, price, smash, take profit. So you can see how simple this formula is, this entry model is. The entry model, it's not complicated. It's not supposed to be complicated. As long as you know the direction of the market, like where is the market actually going to, and then drop down to the lower time frame for you to catch a good entry, then you'll be okay. Right? But this, like a lot of it also comes down to intuition, actually understanding the market and taking so many trades to the point where it's like, okay, I know where the market is going to go, and I know how the market is going to behave. So if you do that part and you have intuition, because that's really like the hidden secret that a lot of people will keep away from you. It's that we just have traders' intuition, right? A lot of people have that intuition, which helps them so much in their trading. And I'm sure you will develop it down the line in your trading, but you just need to keep taking so many trades. Like again, I backtest and journal so many trades, right? Like I've been doing it for such a long time that I have all the data I need for me to actually be able to do all of this stuff. So that's what you need to work on, and eventually you will be able to do the exact same thing. But this is, again, the easiest way for you to trade, I feel like, from my experience, is understanding higher time frame analysis and then dropping down to lower time frame for you to catch an entry. But if you do one without the other, it's simply just, you'll have a lower win rate. I will tell you that, because I've done it before when I was backtesting. I've done it where I'm like, okay, I won't look at the higher time frame. I will just simply take lower time frame entries, and it's never a good idea. So you always need to have context behind every single trade that you take.
Hopefully this video gave you a lot of clarity on exactly what you need to do now for you to scale your prop firm funding to 7 figures, and the exact action steps that you should take next for you to start building it. And if you want my help in building your 7-figure prop firm portfolio using the exact same steps that I've laid out in how I've been able to achieve 7 figures
figures in funding, simply click the link below. You'll find a calendar link where you can speak to me directly and I can guide you and give you the exact roadmap to how we can scale you as well to 7 figures. That way you can build a consistent income with trading.